Welcome, and thank you for joining us. You're listening to The Educated Investor. On this podcast, we'll not only cover current events, but also ideas to help you possibly maximize your Social Security benefits, manage your taxes, and overall become a more educated investor. And now, here's your host, Jerry Blakely.
Hello, and thank you for joining me today. My name is Jerry Blakely, and I'm very excited because today we are recording the first official Educated Investor podcast episode, and I'm even more excited because we have Scott Householder, the CEO of Householder Group, joining us today to discuss a very hot topic right now. That's inflation. Well, Scott, thanks for joining me here today. And for the audience, just a bit of background, Scott Householder is the founder and CEO of Householder Group Estate and Retirement Specialists, founded back in 1997. The Householder Group is the company I've worked for 21 years as a financial advisor before successfully selling my practice. Well, Scott, thanks again for joining us. How are you doing today?
Jerry, I'm fantastic. It's as I always say here in Arizona and Paradise Valley, it's a perfect day in paradise.
Well, okay. Well, great. You're probably heating up over there as the summer's coming on, being in Arizona.
We're over 100 degrees now, and the only challenging part, Jerry, I commute back and forth to work on my bicycle, and it's about a 20-mile round trip, but the morning ride in is always nice, but that afternoon, that cement, it heats up, and so I'm feeling it.
Well, I'm feeling bad for you being here in Oceanside where I had breakfast by the fireplace with the foggy air and everything, so I'm sorry you're so hot.
Well, you're rubbing it in there for me.
Well, speaking of things heating up, inflation is heating up like crazy. But before we get into today's market inflation, let's just start with some of the basics, Scott. Can you maybe describe for us, when we use the term inflation, what does that really mean?
Well, everyone knows that inflation is the rising cost of goods and services. And of course, the underlying reason is the falling value of the currency. And so as the currency is decreasing in value, then everything that we buy ends up costing more.
Okay. The decreasing value of the currency.
Yes. Specifically, Jerry, inflation in March was 8.5%, which is a 40-year high. And I know people yours and my age, we remember back in those days when we had 12% inflation. In fact, my first mortgage, I'm dating myself, but it was in the 13% range on my house. So those days were pretty painful. And of course, now the good news is this last month of April actually saw inflation decrease to 8.3. So we got a little bit of relief there.
Oh boy, when I know the average is something like 2 or 3 or something. But your first mortgage was, what'd you say, 11%?
13.
And I'm wondering if, like many people, probably the last car you just bought, whatever that was, you probably paid more for that car than you paid for your first house.
It's funny. That's actually true, Jerry. That's the way prices are these days. It's crazy, but inflation is something, and I think it's important to realize because everyone thinks inflation is bad. And having my undergraduate degree, my minor was in economics, and so I've listened to economists, I don't know how many hundreds of hours, and I'm not an economist, by the way, but I've listened to a lot and in an MBA school and so forth. The thing to realize about inflation is that controlled inflation is actually positive for an economy. And when you hear something like that, you think, well, gosh, that intuitively, that doesn't make very much sense. However, the opposite of inflation is deflation. And when you're having deflation, now you're in a recession, and that's not good. So controlled inflation, like we've had in as you said, the 2, and we've been averaging 3 for a long period of time, that's actually very positive. That's signs of a healthy economy. However, when it gets into the 8.5% range, and I know like this weekend I was with my daughter Megan. She's in the middle of a move and she had to stop to fill up her car because I don't buy gas myself very often. I have a car, but I only fill it up like once every couple of months because I bicycle everywhere. But when we stopped to buy gas and we got out, and of course I didn't offer my credit card. She's an adult. She can pay for her own gas, but she was pretty shocked when it was over $5 a gallon.
And that's in the Phoenix area?
Yes.
Well, I think I'm going to move there next month or this weekend or something, because we're over $6 a gallon here in California, in the San Diego area. So that is crazy, though. Extremely expensive.
Well, if you move here, Jerry, remember you'll have the heat.
I'll have the heat, yeah. Well, I will try to keep in mind that inflation is not all that bad. I'm always complaining about paying $3.50 for a dime cup of coffee, which coffee used to be a dime, when I first started drinking it a long time ago. But Scott, beyond this thing of the devaluation of the currency and so forth, like what causes inflation? Can you kind of tell us, for our listeners here in English, what causes inflation?
I'm going to be specific, Jerry, regarding this inflation cycle that we're in, because everyone's wondering, well, what has caused this situation? And there's really four major reasons that we're experiencing the surge of inflation right now. Number one is the huge increase in the money supply, the monetary supply. Mm-hmm. And of course, that was caused in part when the pandemic hit and the stimulus came out. Then there was a surge in dollars going into the economy from the government, and everyone knew about the printing of money and so forth. My son is interesting because we're having conversations back at that time, and I was sharing with him we're going to see inflation going up. I certainly did not necessarily predict that it would go up almost 300% in this time, but I knew that all of that was going to cause inflation. It was interesting because he's a millennial and he says, "Oh, the deficit is just a nebulous number," and and it's like, well, when it gets into these gigantic deficit amounts, you do tend to think that it's nebulous, but the reality is that you have too many dollars chasing too few goods, and when you have that type of a surge in money, and then people are spending, and that leads to the second item that's causing inflation right now is supply chain disruptions, also in part caused by the pandemic and so forth, but the cost of lumber, other things, all the ships that were off the port over in California, if you recall that, Jerry, last year.
Mm-hmm. And yeah, right.
Mm-hmm. And it's never caught up. And at the same time, you have worker shortages, and that's number three. Worker shortages then have caused rising wages, and with wages going up, then you have inflation. And fourth is the fossil fuel policy. And I don't want to make any political statements today, positive or negative, because there's a lot of people that are very happy about the tightening on the fossil fuel policies for environmental reasons. And certainly my oldest daughter, who's working on her PhD in astrophysics, she'll tell you about how we need to protect the planet, and I'm in total agreement with protecting the planet. At the same time, when you look at the underlying causes right now, and we're talking about the cost of gas as an example, we have seen a huge surge in the cost of fossil fuels because of the policies that have been enacted.
Mm-hmm.
So those are the major four reasons, Jerry. The money supply, the supply chain disruption, worker shortages, rising wages, and the fossil fuel policies are what have really stimulated the inflation cycle at this point.
Well, that's interesting because understanding that, and I'm thinking back that before we had the supply chain disruption, the worker shortages, maybe the fossil fuel shortage, fossil fuel tightening thing. But before that was this cash, the influx of cash into the economy. So we've been in this very low interest rate environment with the government doing all kinds of stuff to try to get people to spend money. And I know I don't know, how long's it been, Scott, 10 years, 12 years or something? I kept waiting for inflation. It never happened. And then it came on big time now because of the pandemic, supply chains, worker shortages, and all that. So, I don't know. So these are this is kind of a what do they call it? A confluence of all the different things together that are going to suddenly show up and cause it to rear its head and take off like crazy. Why do you think when we had this big cash influx for many years there wasn't inflation? Like inflation didn't have traction for quite a while, and I think we all kept expecting it and waiting it, and didn't happen.
You know what, Jerry? I'm actually as surprised as you are that it didn't increase faster. But part of it was, and I'll compliment the Federal Reserve System, because the Federal Reserve has focused on having low overnight money rates for many years. And quite frankly, they have done a relatively effective job of minimizing those interest rates. But right now, the Federal Reserve is tightening the belts. And when I say tightening the belts, that means that they have been increasing that federal funds rate. And with the increasing of the federal funds rate, then that's been one more item that has stimulated the inflation.
Because interest rates are going to go up on mortgages and credit cards and car loans and everything else when that federal funds rate goes up. Is that right?
Absolutely correct, Jerry.
Yeah, and that certainly adds to everybody's cost when they are using financing. Mm-hmm. So, Scott, are there any indicators that inflation will be taking effect like before it happens?
There are, Jerry. There's really 5 early warning signs, and one is utility stock prices. Utilities are known for their relative stable share price and above average dividends, but when we see inflation taking off, they're basically legalized monopolies, or what utility companies are. And it is I'll come back to it a little bit later, a potential inflation protection area too. But that's why when we see those utility prices start increasing, it's like, well, inflation is right there. And right along with that, number 2 are commodity prices. So when we see raw materials such as copper, such as lumber, etc., when we see those prices increasing, then it's like, well, inflation is right behind it, as well as precious metals is number 3. And then number 4 is factory capacity utilization. And when I say factory capacity utilization, when we see the typical factory is never fully utilized. If you can get up to 100% utilization, that's ideal, but none of them are at 100%. But as that factory capacity utilization increases and it bumps up above the normal range, that's when, the demand is high for the goods, and we know inflation is right behind it. And number 5 are wages. When we see those wages start increasing, we know inflation is soon to happen, and all the prices are going to start increasing. So those are the major 5 indicators. And right now, if you look back at what was happening before inflation took off, these 5 indicators were telling us that we were going to have substantial inflation. It has surprised everyone how huge and how fast it has happened, though.
Yeah, I'm thinking of the minimum wages, being raised up so drastically relatively recently, but it sure came on quick. Well, how does inflation impact different areas of investing, like on gas, the housing, stock market, and so forth?
Well, let's talk about the stock market first. And if we look at stocks, we'll see there's been a lot of volatility right now. And that's normal when inflation is in its early stages and the market is very jittery, because investors are worried about, are my investments going to be okay or not? And of course, there's a lot of smaller investors, and we know this is the case. from history because they get emotional, and when they have emotions that affect their investment decisions, it's typically wrong. Mm-hmm. And very often it's the opposite of the big institutional investors. And Warren Buffett is an example. I was listening to a podcast from him. He's the best investor in the world, probably, at least in during our lifetime. Mm-hmm. He says it's a great time to be buying right now. And of course, if you look historically, from 1914 to 2022, the U.S. inflation has averaged 3.25%. Well, that's in the normal range. Now, during that same period of time, from 1926 to 2002, the S&P 500 index has actually returned 10.49%. So inflation the stock market's been a good place to be to protect ourselves from inflation during that time, Jerry.
So, Scott, it sounds like if the market's been long-term over 10% and inflation's been 3%, it would probably be important to be in the market a little bit longer than to succumb to emotions of, getting scared things are down. Got to be the worst time to sell things. And like you said, Warren Buffett says the best investor ever is the best time to buy things. So am I kind of thinking of that correctly?
You are correct, Jerry. And when you think about when most people are selling, the smart people are buying, and vice versa. And so we have to be careful about getting emotional, and we have to be thoughtful about having a safe and secure approach to our investment strategy.
And then the emotions, so part of the fears, the news we see and everything else. And so this Russia attack on Ukraine has got people shook up and rattled. What does that mean for inflation?
Well, a couple of things. Number one is we talked about the rising price of gas and the fossil fuel policy in America. And at the same time, we've got the whole disruption of the petroleum from Russia with the war and so forth. So it's been totally disruptive on worldwide supply, and that's created more inflation with those gas prices spiking even more. So it's kind of a perfect storm. And certainly when there's political instability, and that's particularly Russia going into Ukraine, it has created a lot of fear in the public and worldwide. People are wondering, gosh, is this the beginning of World War III? What's going on? And you see a lot of panic.
So that's the markets are very volatile and people are scared right now. But for people listening to this, like, what can we do with everything going on? What can we do to protect ourselves from inflation?
Well, there's several things. I mentioned that the stock market, but let me broaden that to equities in general. And when I say equities in general, anything that you own that's actually something that's tangible, and let's use the example of real estate. Most of our listeners probably own their own home. Well, that's a great inflation protection because we've seen the cost of real estate skyrocketing. So from a net worth standpoint, their net worth is increasing and they've got that equity. Even if they have a mortgage against it, they still have the equity. And the differential, of course, is what they actually have in their equity. The sale price of the home, if they want it to sell today, minus what the mortgage is worth, is their actual equity. Well, we've seen that skyrocket this last year, so that's a great inflation protection. The stock market we already talked about. Basically, if you look at our audience today, everyone falls into two different categories. Category one are those younger people who are still working, still part of the workforce, like you and I, Jerry, and I love putting myself in that young group, don't you?
Yeah, I'll say thank you. I'm 110 years old. You're still calling me young. I appreciate that.
That's right. Yeah, we're the youngsters. All of my buddies are retiring, and they're saying, Scott, why are you still working? But I do love what I do. So, and I know you do, Jerry. So.
It keeps us young. It keeps us young.
That's right. But for the retirees, and that's a great place to be when work is optional and retirement is affordable, and they have decided, okay, I'm financially independent. I'm going to opt out of working and retire. And quite frankly, what I always find working with retirees is that our most successful retirees are extremely busy people. Their volunteer activities, all of the things that they do in the community, and so they're typically very active in giving back, and it's exciting to see that. But the people who are retired then have a different situation, because the people who are working, of course, part of their inflation protection is their income. If they're working for a company that also is going to be relatively positively impacted by inflation, and you hear that positive impact, and you think, well, who's positively impacted? Well, a lot of companies just simply raise their prices. Mm-hmm. And of course, one of the companies that Warren Buffett was talking about is American Express, just as an example. They raised their fee on their Platinum card from $500 last year to $695. Mm-hmm. And Warren Buffett is saying, well, they just have the ability to raise their prices and people pay. So those type of employers are going to pass along their price increases in the form of higher wages to their workers as well. Now, the people who are retired need to be particularly careful, and we talk at Householder Group. We always are recommending that we look at what we call the 3-bucket theory. And Jerry, I think you're familiar with that, aren't you?
Pretty familiar with it, since I learned it at Householder Group years ago.
That's right. That's right. Well, one of those buckets being FIG, and when I say FIG, that stands for fixed, insured, and guaranteed. And so when we look at those type of investments, of course, the stock market is a market investment, and we've seen that volatility, but people are also very interested, and it provides security in a diversified portfolio when they utilize the FIG, the fixed, insured, and guaranteed. Does that make good sense, Jerry?
Oh yeah, definitely. Maybe especially for retirees.
Yeah.
We are pretty close in our time, and I'm thinking this has been great information you've shared with us, and I hope our listeners have many takeaways. And I got 2 takeaways, I'm thinking, about inflation, and one thing about the age thing you said. So I went to the movies recently by myself. I had a chance to go out and watch the multi-universe thing or something, Doctor Strange, whatever. But these fancy movie theaters now, you can buy wine. So I bought my little thing of Pinot Noir, and it was like $16 for just a few ounces of wine. Like, wow, that is a lot, where it used to be, I don't know, something $5 or $8 or something. But the funny thing was, the gal there, she carded me. She said, "Can I please see your ID?" And I said, "Do you think I'm too young?" She says, "No, I want to make sure you're not too old to drink this." So that's my takeaway. So
that's great, Jerry.
Anyway, Scott, thank you so much for being with us today. It's fun to chat with you and fun to laugh with you, and we appreciate you spending your time with us and sharing your wisdom and experience. So thank you for all you do.
Well, you're certainly welcome, Jerry. It's my absolute pleasure, and I appreciate your questions and your excellent job. Thank you.
Okay, you're welcome. Well, thank you for joining us for our official first episode, and we had a great time with all of you, and hopefully you walked away with some very valuable information. I hope you join us again next quarter, when we will be discussing mid-year market update and outlook with a special guest speaker from LPL Financial. And remember to make sure that you subscribe to this podcast so you can receive new episodes right when they're released. And as always, if you're enjoying the podcast, or if you have a topic that you'd like us to review, let me know. just send us an email at educatedinvestor@householdergroup.com. That's educatedinvestor@householdergroup.com. Well, onward and upward. Thank you again for joining us. Until next time.
The opinions voiced on this show are for general information only and are not intended to provide specific advice or recommendations for any individual, nor intended to be a substitute for specific individualized tax or legal advice. We suggest that you discuss your specific situation with a qualified tax or legal advisor. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to effect some of the strategies. Investing involves risk, including possible loss of principal. Statistics and sources on today's episode were provided by tradingeconomics.com, investopia.com, and fortune.com.